Please welcome to the stage Gabriel Abed, founder, BIT.
And at least I understood then the hunger I felt, and I didn't have to call.
Good morning, everyone. I am very happy to be here. Do we have slides? Yes, so this morning I'm going to discuss central bank digital dollars and some of the work that we've done out of the Caribbean. But before I get into it, I'm going to go through a few things. For example, simply put, what is blockchain? Most of you in this room know it, but to reiterate, it's simply a ledger that cannot be tampered, destroyed, or edited in any form or fashion once a transaction has been written to it. It becomes a system that allows history to be recorded without the potential tampering or removing of that history. So some of the benefits of blockchain are that it's trustless, it cannot be, entries into it cannot be tampered with, the risk of forgery, the double spend problem has been solved, and it enables interconnected financial systems. Now, one of the very important things that we need to understand and observe about blockchain technology is we often get wrapped up in the differentiation between the price, for example, Bitcoin, and the commodity side of it, and the protocol side of it. And today I wish to focus on the protocol. And why that's important is because we often lose sight of the real story here and what we're actually after. And the real main event of blockchain is the protocol. Now, what is a protocol, you may ask? And we use these every single day. Whenever you load a website that's using the hypertext transfer protocol, whenever you're on the internet protocol. These are software layers designed to connect dissimilar systems. What it does, it formats and creates standards and policies comprised of rules so that everyone follows it. It is specific for interactions between communication devices, and it governs end-to-end processes timely, securely, and it manages data and network communication. Now, that's pretty important, and it allows for some of the applications to be built, like land registry systems, supply chain sensors, personal identification, healthcare records, and most importantly to me, asset digitization. So, some of the problems that blockchain can solve: lengthy settlement times when moving funds across the world. Underbanked and unbanked citizens can now be part of a global financial system. Lack of banking infrastructure. Where there's lack of banking infrastructure, there's a parity with smartphones, and mobile phones would actually replace this infrastructure electronically. Fragmented currencies is one of the major issues that blockchain can help solve. High remittance costs and settlement times, no access to gateways and open gateways, and one of the more important issues to me, and I'll expand on why, is the issue of de-risking. So we've talked about blockchain, we've talked about the protocol, we've talked about some of the problems. So I'm going to introduce the company that we built in 2013, Bit.com. It was formed on the island of Barbados to look at solving some of the financial problems you would have seen. A couple of us got together and observed that the Caribbean was plagued with a bunch of these issues. And over the years, we developed solutions to aim to solve these problems. So Bit.com was founded in 2013, and over the years, we built out a bunch of solutions to work towards a central bank digital dollar. The notion is that if we can provide a digital dollar for our country, we can change a lot of things from an economic uplift perspective. So one of the main things that we realized that we could introduce was a central bank digital dollar. The concept that the monetary authority's fiat currency can move away from a physical base to an electronic base, allowing central banks to start having the utmost control over their society. So blockchain technology can be built on top of, hence the protocol side of things, and it can be used for asset issuance. Another cool part about blockchain is its cryptographic functions, and it can be used to secure token asset value, and it can be used to transfer between two parties without the need of a central authority. So utilizing technologies such as blockchain, we were able, such as Bitcoin on the blockchain, we were able to accomplish a central bank digital dollar. With central bank digital currencies, the transaction is in the settlement, and each record is stored in an immutable ledger. Central bank digital currencies open the door for smart economies through the notion of programmable fiat currency. We've never had an instance where a monetary authority's tool or a financial instrument had the capacity to be manipulated through code. It improves KYC and AML measures. The society can now monitor or have advanced monitoring around suspicious activity, anti-money laundering, and counter-terrorism-based financing policies and procedures, and it lets regulators tap into this on a micro level. Central bank digital currencies can transform communities and provide financial access to the underbanked and unbanked. And where I come from in the Caribbean, more than 50% of adults do not have access to modern banking facilities. So, one doesn't just create a digital dollar. It's much more complex than that. And when we started in 2013, it seemed like an easy mission at the time. Just use blockchain technology, copy, paste, create a digital dollar. It's a lot more complex than that. And a digital dollar cannot function on its own. It needs to be able to be used in society. Everywhere a physical piece of cash can be used, you now need to emulate that in the digital world. So we came up with the 3 layers of the money supply chain, which emulate the 3 layers of product development lifecycle. Products go through 3 cycles: manufacturing at the first layer, distribution at the second layer, and retail at the 3rd layer. And we replicate that with cash. So at the first layer, a central bank or a monetary authority using software in a closed, responsible environment will utilize blockchain technology to issue a relevant dollar against their nation's currency. At the layer below that, a financial institution such as a commercial bank, a credit union, or corporatocracy can now integrate with this digital dollar, and they themselves become digital cash account providers. And then at the final layer, this is where the consumers in the room come in. In order to interface with this digital dollar, we need to ensure that we built a mobile app that allowed dollars to be sent seamlessly between consumers. So we built all 3 of these layers, and what you end up having is an ecosystem. At the first layer, once again, central banking, a platform for the issuance of the monetary solution. Layer below that is the distribution across commercial entities. And finally, at the bottom layer, you have the ability for consumers to send and receive, merchants to accept payments, the ability to go to a teller or ATM, use my phone, send it digital dollars, and receive physical cash. Now, this ecosystem is built around a standard that we call the digital dollar standard. And the reason that we introduced this digital dollar standard is we realized that not all central banks are equal, nor would all central banks use a similar system. One central bank might prefer Hyperledger for their digital issuance. One might prefer a sidechain or a distributed ledger technology that's private. One might prefer to use Bitcoin's blockchain and the colored coin protocol. The idea behind it is you have to create an interoperable layer so that these dollars can all be recognized. And I'll get into that a bit later. But what are the advantages to a central bank, and why should they go after this avenue? What is some of the things that make a difference? For example, for starters, increased seigniorage. When a central bank goes and prints physical cash, that has a real cost to the economy. The US dollar, that physical piece of paper, that linen piece of device, that actually has a real economic cost. And central banks can save a lot of money by moving towards a digital component of that. As a matter of fact, the savings are 99.99% because it costs nearly negligible to issue a digital fiat. Secure non-counterfeitability. Cryptographic currencies are computationally impossible to counterfeit. You cannot replicate a SHA-256 based address. In the physical world, I can somewhat copy physical dollars and make a counterfeit. It's not possible in this field. Auditability, the ability to audit all of the transactions in society with a click of a button, does not exist right now. Monetary policies can be enforced and monitored with a higher level. Interoperability, the ability to have a brand new financial instrument, which is quite critical. So one thing that I'd like to note is we've had e-money systems forever. They exist: PayPal, Visa, MasterCard, Apple Pay. There's nothing fancy about those solutions when you look at a tool for a monetary instrument. What we have designed here is a monetary instrument. This is a tool that will be utilized by the central bank to create a public e-money system, allowing all actors in society to integrate and interface with this system. And then, of course, the efficiency that comes with it. And then finally, financial inclusion. Some of the perceived risks that may come with digital dollars is the scalability. A lot of people argue right now that Bitcoin is not scalable, or that cryptocurrencies or blockchain is not scalable, which is roughly a myth. It's not scalable because the nerds won't let it scale, because we can't agree on economic values or principles. But the idea behind it is there are several solutions out there that scale to thousands of transactions per second, making Visa, MasterCard, and PayPal look like molasses moving uphill. From a hacking perspective, blockchain itself, shy of 2010, has never experienced a situation where it's been hacked. And the central systems around it have been hacked. But it's getting this across to regulators to understand that a digital dollar issuance does not mean that you're going to end up like Mt. Gox. And then, of course, the money laundering and terrorism financing, which is quite ironic because this system allows for a much more advanced level of control around those scenarios. So part of our education over the years, over the last 5 years, has been educating on these three main risks that central banks would be exposed to. But throughout the last 5 years, we have worked extremely hard. And our company, on September 18th of this year, so last week, got a major breakthrough, our biggest milestone to date. So while we have several central banks in our pipeline and several agreements signed, specifically with the Eastern Caribbean Central Bank, the Central Bank of Curaçao, and St. Martin, last week, the Prime Minister of Barbados, the Honorable Mia Mottley, at our second annual conference, announced that the Barbados government would be entering into a full partnership to launch our product M-Money, which is a byproduct of BIT, the digital dollar, throughout the Barbados economy in a partnership with the Central Bank of Barbados and the Financial Services Commission. Now, the reason that this is huge is because you're about to see the world's first legal tender that's digital, and that's pretty incredible. So our product that we introduced, M-Money, is a one-to-one with the Barbados dollar. Every dollar that comes in is stored in a reserve, in full reserve, not fractional reserve, and a digital counterpart in a one-to-one ratio is created. And what we end up creating around this M-Money solution was the M-Money teller, merchant, and M-Money mobile wallet. So right now in Barbados, I can go to a gas station, one of 30 across the island, and I can give them $100 to top up my M-Money account. I can use it to pay for gas. I can go around to the coffee shops. I can use it to pay my bills. This is a functioning e-money system, or an ecosystem right now running on an island. So some of the solutions that we aim to solve, some of the problems that we aim to solve are lengthy settlement times, the ability to transact and have near instant verification of that transaction, financial inclusion and unbanked. I don't think I need to expand any further or go into that again. We all understand how big of a problem that is. Now the coconut vendor on the street can now be part of our financial ecosystem. Barbados touts over 100% a mobile penetration rate, meaning that over 100% of Barbadians already have access to smartphones, but yet less than a third of them have access to banking facilities. This changes everything. There's no open gateways or open payment standards. Now there is. Programmers and entrepreneurs can now finally tap into a money system. Previously, they were held out from the closed system that they were not allowed to participate in. And of course, removing the barriers to e-commerce and innovation to payments, which is quite critical when looking at what a society's uplift can look like from an economic perspective if you were to make a more efficient payment ecosystem. So now that we're here, and we're at the point where over the last 5 years, we finally got to the point where we've issued, or now in the process of issuing, a central bank digital dollar and creating the 3 layers of the money supply chain, or the ecosystem. But where do we go from here? What happens when we go and replicate this in another country and create this ecosystem? Well, the next step is to start building an interconnected central bank system. We call this layer 0, which is the final layer of our solution. What this would allow is for central banks to start coming together in a more direct and peer-to-peer fashion. Currently, we don't have that. So let me give you a basic example. If I, as a Barbadian, wanted to pay my trade neighbor in Trinidad or Tobago, which is 30 minutes away, I have to go from Barbadian dollars to US dollars, back to Trinidadian dollars. Don't mind, we have a notional value of trade between ourselves. But right now, the current financial systems that exist do not facilitate this type of environment. So what we wish to introduce and are starting to work on is our inter-central bank settlement network. The ability for two central banks to directly settle between each other using these digital programmable fiat currencies. It opens up and changes the entire way the world works from a settlement perspective. Central banks can now start experimenting with direct currency swap agreements, trade-weighted index currencies, and benchmark currencies, all driven on programmable digital layers. And this starts to change the way that we settle. Currently, right now, the Bank of International Settlements is the organization that has designed the Basel Accord and the RTGS system, the way that we settle and move money around the world. But there's one major problem with that organization. Small island developing states like my own don't have representation. It's owned by 65 members, which control 95% of the world's GDP. We don't have representation in there. We don't have any voice, and the system that's designed isn't built with us in mind. It's not built with developing nations in mind. And what ends up happening are the policies and procedures that are mandated around these systems usually add overheads and inefficiencies that keep us out of the system. I mentioned de-risking earlier. De-risking is a plague and cancer that's facing the Caribbean region, where we're losing access to correspondent banking relationships and we're unable to transact with the rest of the world. Belize was one of the countries that got affected by this cancer. And what ended up happening was the country was stifled for days without the ability to send US dollars in or out of the country. Do you know what that can do to an economy or the citizens in that country? That is near certain death, that's hunger, that's suffering. This solution solves that. This allows us to look at our trade partners. The Caribbean touts one of the strongest trade agreements in the world, the revised Treaty of Chaguaramas. But yet, we don't have a multilateral clearing facility, but there is mandate for one. So moving towards this avenue of building a central bank digital currency, launching an ecosystem, replicating that in several developing nations, and then allowing them to start using different economic agreements that are based against software can change the entire way the world works. In conclusion, by issuing a digital currency, a central bank can solve the problem of not having a legal tender to securely, swiftly, and uniformly be the medium of exchange in an e-commerce setting. In effect, a central bank digital currency solves the problem of cumbersome physical notes in much the same way that physical notes solve the problem of cumbersome precious metals. Thank you very much.